Hello everyone, welcome to my channel. How is Warren Buffett getting ready for a recession? He is a man who has been putting sufficient time in the market as he is 94 years old, but we also know that he times the market to a certain extent, as evidenced by his recent trades where he's selling stocks that he's had for a long time. Warren Buffett's Berkshire Hathaway sold nearly half of its stake in Apple, and he's also sold billions in Bank of America. He's building up a cash pile, I think, getting ready for a recession and the stock market crashing. Berkshire Hathaway's cash swelled to a record $277 billion last quarter as Buffett sold big chunks in stock holdings, including Apple. The Omaha-based conglomerate's cash hoard jumped significantly higher from the previous record of $189 billion set in the first quarter of 2024. The increase came after the Oracle of Omaha sold nearly half of his stake in Apple in the second quarter. Berkshire has been a seller of stocks for 7 quarters straight, but that selling accelerated in the last period, with Buffett shedding more than $75 billion in equities in the second quarter. That brings the total of stocks sold in the first half of 2024 to more than $90 billion. The selling by Buffett has continued in the third quarter in some areas, with Berkshire trimming its second biggest stake, Bank of America, for 12 consecutive days, filing this week showed. For the second quarter, Berkshire's operating earnings, which encompass profits from the conglomerate's fully owned businesses, enjoyed a jump thanks to the strength in auto insurer Geico. Operating earnings totaled $11.6 billion in the second quarter, up about 15% from $10 billion a year prior. Buffett, who turns 94 at the end of the month, confessed at Berkshire's annual meeting in May that he is willing to deploy capital, but high prices give him pause. We'd love to spend it, but we won't spend it unless we think a business is doing something that has very little risk and can make us a lot of money, the investment icon said at the time. It isn't like I've got a hunger strike or something like that going on. It's just that things aren't attractive. Geico, the insurance company Buffett once called his favorite child, registered nearly $1.8 billion in underwriting earnings before taxes in the second quarter, more than tripling the level of $514 million from a year ago. Profit from BNSF Railway came in at $1.6 billion, in line with last year's number. Berkshire Hathaway energy utility business saw earnings fall to $326 million, nearly half of the $624 million from the same quarter a year ago. BHE continues to face pressure for possible wildfire liability. I'm going to show you Warren Buffett's top stock holdings revealed in Berkshire's latest quarterly earnings. These are Warren Buffett's top holdings. He's turning heads after Berkshire Hathaway disclosed it sold nearly half of its Apple stake last quarter. Here's where the legendary investor's top holdings stand now. About 72% of Berkshire's equity portfolio is concentrated in 5 stocks, according to the conglomerate's latest earnings report. Apple, despite the heavy selling from the Oracle of Omaha, remains Berkshire's biggest holding by far, with a market value of $84.2 billion at the end of June. And the Bank of America stake is now worth still about $37 billion after Berkshire sold $3.8 billion worth of its shares in a 12-day selling streak that started in July. Berkshire trimmed its Chevron bet slightly in the second quarter, but the energy stake, with a market value of $18.6 billion at the end of June, remained in the conglomerate's top 5 holdings. Berkshire has actively traded this stock for a few quarters. Meanwhile, Berkshire held on to longtime bets Coca-Cola and American Express, worth $25.5 billion and $35.1 billion, respectively, at the end of the second quarter. Shares of Coca-Cola were up more than 17% this year, while American Express has gained 24%. Both stocks have outperformed the S&P 500 so far in 2024. While it might be wise to follow Warren Buffett and build up your cash, I think we got one last bullish shot with the Magnificent Seven, and of course that's Nvida. They report earnings on August 21st. Now, the Magnificent Six that have reported so far have reported generally good earnings, but not excessively wonderful earnings, and that's what the stock market would need to send them higher. But they've reported good earnings for the most part. And what they all report is a drag on their earnings is the amount of money they've been spending on artificial intelligence. Who have they been giving that money to? They've been giving it to Nvidia. Nvidia doesn't have artificial intelligence expenses buying the chips because they are the ones designing the chips. So if anybody is making money, it's Nvidia. And I think it's very possible that in spite of everything, in spite of the triggered recession, in spite of the other parts of the Magnificent Seven not doing as well, I think they could still have a blowout quarter. So I'm very much considering buying back in a major way into Nvidia, especially since the stock price has come down from over 120 and it floats around 106. If it goes below 100, it's definitely a buy. But I think it might be a buy right now where it is. I might buy into it gradually. We will see. But I want to own some of it before August 21st when they report earnings, because I expect them to be blowout earnings, at least for this quarter. And the other companies that produce artificial intelligence have every indication that they're going to continue buying more chips. So I think it's going to continue on at least for a while and maybe for a decade. And looking at the 1 month chart on Nvidia, you can see that it's come down 13.7% in the last month. It's come down from being over 130 to hanging around 107. And it looks like it might be trying to form a bottom, although that isn't confirmed by any sense yet. We have to see how it goes. But I think we're getting to the levels, and especially if it gets down to around 100 or maybe a little under 100, to me, that's going to be buying time for me. I might buy, like I say, I might buy it gradually in stages. It's below its 50-day moving average, and its relative strength is 41, so it's not overbought to any degree. I believe you can make money holding stocks long-term, good quality stocks, and that's basically what I did for a lot of my life. But since I'm retired, I've been trading individual stocks and ETFs and doing it on an active basis, and I've made far more money. You can make money on a long-term basis buying and holding, but when you're having the kind of markets we've had in the last 4 or 5 years, where we've had 2 major breakouts, just wild rallies, and 2 major bear markets in my mind, and I made major money in the bear markets by being bearish and major money in the bull markets by being bullish. You just got to be willing to change. So I think that's the way I roll. Thank you for watching.